Nvidia's annual GTC event is underway with CEO Jensen Huang, the poster child of artificial intelligence, set to speak just in the next hour. So let's break it all down with Wedbush's global head of technology research. You know him, colorful as ever, Dan Ives. He has an outperform rating and a $175 target price on those Nvidia shares. Notable bull, especially in technology. Bullish as your outfit right now. So let's talk about whether or not Jensen can deliver the goods at GTC this afternoon.
I think it's going to be a watershed event. I mean, I think when you hear from the godfather of AI, Jensen, he's going to lay out what demand looks like for Blackwell. And ultimately, I mean, right now, we believe 15-to-1 demand to supply. You know, in terms of what we see for Blackwell. It's about not just things like in terms of Rubin and others, physical AI, autonomous robotics. And I hear everything that Josh is saying, but in my opinion, we are in year 3 of an 8 to 10 year build out for the AI revolution. And that's why it's so front and center what we're going to hear from the godfather of AI, Jensen, you know, in San Jose.
All right, so Nvidia shares have now pulled back notably, not as much as other mega cap technology stocks have, but a lot of it was driven by kind of the recent quarterly reports that have come out. The fundamentals are very much intact. Nobody's going to dispute that. But the question is relative to expectations, and that's where Nvidia ran into some problems with its most recent numbers. They're still growing and by a rapid clip. But why are analysts then so much more bullish where they cannot meet exactly or exceed a lot the expectations that are out there?
I think it's a digestion period. I mean, I think we go through the next 4 quarters, you're going to ultimately see, I think street numbers are going to come up 15-20% over the next few years. I think buy side definitely is very negative here, but as this all plays out, I think it's a stock that has a 2 in front of it. Because the AI revolution, remember, despite DeepSeek in terms of everything we saw there, with some of the Cinderella story, in terms of some of the fears, in terms of NVIDIA on the chip side, there's one chip in the world fueling this, it's NVIDIA.
This is the cheapest you have been able to buy NVIDIA stock since October of 2022, before the launch of ChatGPT, which set off the AI era. So NVIDIA in the AI era, as the leading player in AI, has never been a better bargain than it is today. The stock is, the company has 52% growth expectations for this year. It's now a 20 forward PE. How insane is this market right now where they would rather buy Walmart at 30 some odd times earnings than this at 20? Walmart, if they're lucky, might be growing high single digits this year.
I'd say in 25 years doing this, I can name, so I count the times that have been almost the generational opportunities relative to what the stock's doing. That's where I think NVIDIA is here.
I think this is a generational
I think because my view is we're going to be talking about NVIDIA 4 trillion, 5 trillion over the coming years, despite near term, you know, in terms of political export controls, everything else. That's where this is going. We're talking about 2 trillion of AI capex next 3 years. There's only one red phone that you could call to get those chips. It's
you want to laugh?
NVIDIA.
You know what he should announce at GTC? How about a buyback? I think that would probably do more good than any technology.
Okay.
I mean, it's really, at this valuation, should be shrinking the float.
Dan Ives has had enough, and he can't stay silent any longer about this recent Nvidia crash. It seems that despite the many innovations and promises that Jensen Huang is declaring for all of us, not all that glitters is gold, and the market is responding in a harsh way. Let us explore what Nvidia did, how Dan Ives is analyzing it with an eye to the future, and what the future generally holds for Nvidia. Welcome back, everyone, to Investocracy.
All right, so speaking of the valuation kind of construct, the paradigm that we're in right now, Joe, if you look at the way that it's been described on the forward basis and the valuation that's out there, there is a balancing that's happening right now about whether or not it is the fact that the analyst consensus, the forward earnings expectations for NVIDIA are relatively off, or whether it's the price that you pay for those earnings that is relatively off. Do you think, though, that this is the equilibrium point at which the analysts are more correct when you project earnings out in the next year, and is the market valuing those forward projections properly?
So unfortunately, I have to give you an answer that is not succinct, and it is dependent upon the capex. And the question ultimately becomes, does the macro environment begin to arrest the capital spending on the part of those big players. And if in fact that unfolds over the coming year, then when you think about where Nvidia is, I think it has the potential to cheapen its valuation.
All right, Dan, if that is the case, the people who spend the most money with Nvidia are hyperscalers. These are the most ginormous balance sheets in the history of corporate world. What does the CapEx picture change by? How can it be affected by a hypothetical weakening macro backdrop?
Yeah, and Joe brings up an awesome point. I just tell you, come back from Asia, it's actually accelerating. In terms of, we see about 70% of that CapEx actually accelerating because it's an arms race. In other words, you have $325 billion that's going to be spent by big tech, $100 billion year over year. You don't even have the sovereigns. You don't have the rest of the world. This is something where I actually think the industry is underestimating CapEx, and I get the point in terms of worries about macro. I actually see more and more big tech accelerating in terms of, because as this arms race plays out, whether it's M&A from we see Alphabet and others, no one is pausing. They're actually accelerating. I think that's going to be the key. And I think that's something you're going to hear from Jensen, on stage.
Can I say one thing on this really quickly that I think is important? It's not definitely the case that CFOs are going to look at AI-related CapEx as a cost too high in a recession, because we're about to have an IPO. Klarna is coming public. Klarna fired everybody, and they're basically operating customer service on AI. That's the story that they're telling at their roadshow. This might be like the poster child for how much money a corporation can save in staffing costs using AI. So it's not a foregone conclusion that a weaker economy necessarily means slashing CapEx. They might actually look at this as a way to get through a recession.
I would say that when you're driving down the floor to go to the Final Four, this is the jump shot you take 100 times out of 100 times, buying Nvidia in this market at this multiple. And I'll give you two reasons. Really, from the macro standpoint, the survey data has eroded very quickly, historically quick. And that's the uncertainty that's within the market right now. That's the uncertainty that the administration's brought. But I think it's been so quick of an erosion that it's flushed out. And you're starting to see that. I think Atlanta Fed GDP is going to swing back for a number of reasons. And the other side is there's a bigger story. Yes, there's competition with the LLMs, and you're going to see new chat GPTs drop. It's going to be DeepSeek. It's going to be something else. There's going to be another instance. But it's bigger here where the robotics story. You're also looking at the software. There's no second. This is their competitive advantage. That's their moat. So this is where I want to buy.
As the curtains rose on Nvidia's latest developments at the GTC AI conference, the market was in for a roller coaster ride as the stock took an unexpected dip. Despite Jensen Huang's detailed revelations about Blackwell and Rubin chips, AI advancements, and a new collaboration with General Motors, Nvidia saw a 3.43% drop, much to the dismay of investors who were anticipating a bullish run. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
Every company I speak with, they say two things. One, using AI has become much more efficient. Think about DeepSeek. It's much cheaper to run now than it ever has been, but their demand is up because people are finding new ways to apply this technology, and it's finally making its way into the public that it wasn't in the past few years. So from that standpoint, it really is a sunny outlook for Nvidia, and Tesla can capitalize on that as well, both from a robotics standpoint and self-driving.
And Jensen Huang, as you can see there, is taking the stage at their GTC event for his keynote speech, doing a little crowd work and then perhaps playing a short video. This will go on, as Christina mentioned, for potentially over an hour, so we won't bring you the whole thing live. But every time we get headlines that hit the tape and we watch the stock moves, of course, we'll be sure to bring that to you. And James, is there anything that he could say here to change your mind?
No, I mean, I think NVIDIA is a fantastic company. He's going to talk the demand up. Everything is great as it relates to the longer term opportunities. But right now, there's just too many unknowns for us to go, okay, NVIDIA is going to be the #1 position in our portfolio. And we got to get through the economic uncertainty to be able to do that. Because the thing about these companies is that you can beat on revenue marginally, you can be in line, but that's not good enough right now because you do have error in those valuations. And unless you can say with a high degree of certainty that you're going to beat by a large margin on revenue and there's upside to that, you have risk of valuation contraction. And that's what we're trying to avoid. And,
right, although I take the point that Josh Brown and others have made, James, where, look, if companies are looking to save, for instance, on labor, if the environment is uncertain, but they know that they can invest in AI and kind of become more efficient that way, could it actually be less of a headwind for a stock like Nvidia than we presume?
Potentially. I mean, look, they're at 25, 26 times earnings right now. It's not an egregious multiple. I mean, we're still in the stock. It's just really comes down to a question when you think about it from a portfolio context, you know, how much weight do you want on the duration, higher growth type names that can get hit disproportionately on a broader macro-based sell-off versus more stable names. It's just that fine-tuning that balance within the portfolio to manage the risk over the current cycle, but staying cognizant of the fact that the growth rates are still there and should still be there, and we should hear that from Jensen today. But just over the next, we have tomorrow to get through. We have tariffs April 2nd. You know, there's just, we got to get through the next couple of weeks.
It's clear that Nvidia has been facing a bumpy road with a significant decline in market capitalization and a trailing price-to-earnings ratio hitting a 2-year low. As experts delve into the reasons behind this downfall, factors like interest rate sensitivity, trade tensions, and market corrections come to light, painting a complex picture of the current market scenario. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
I think investors want the bigger picture here, sort of for his perception of chip demand, and kind of call it the medium term, when there's a lot of uncertainty around where the administration might go and cracking down further on their export controls to China, or kind of looking at that Singapore revenue center and trying to figure out or ask the company to answer exactly what's going on there.
Yeah, you don't want uncertainty if you're in big tech. Clearly, there's been a lot of uncertainty at the beginning of this year, and we've seen a big decline. Nvidia this year is down 14% already. And you're right, looking at export controls and examining Singapore probably isn't going to be good for the company, because the conventional wisdom now is a lot of those chips in Singapore are making their way to China and have been behind some of the innovations that we've seen from China. But I think if you look at it from a broader picture, I can tell you, I speak to the tech industry every day. And from what I see, they are investing and investing hardcore in AI and NVIDIA chips. We heard both OpenAI recently and Amazon say that they'll take as many NVIDIA chips as they can, or in OpenAI's case, it was they were out of GPUs. So I anticipate the demand for these chips to be very strong and the AI trade to continue to be very strong moving forward.
All right, we'll listen for detail on that, on Rubin, Blackwell Ultra. This is like our list of buzzwords potentially as we move through this.
While the stock market may be unpredictable, opportunities like Nvidia's current position can be worth exploring. With forecasts hinting at a positive trajectory and analysts projecting a promising future, now might just be the perfect time to jump on board the Nvidia train. But what do you think? Share your thoughts. Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.